All right, good morning, everybody. I want to thank each of you for taking your time to be with us this morning. Welcome to WebU. We understand the importance of continuing education for downtown programs, and we also understand how hard it is to take time to travel to our trainings and how taxing that can be on your downtown budgets. Web University is our attempt to offer you monthly training on various topics that will improve your job skills and your local programs. A couple of housekeeping comments before we get started. To assure that your computer is able to keep up with the webinar, I highly encourage you to turn off any other applications that you're using. I'll turn mine off. Especially things like email, internet browsers, Office documents, and things like that. Go to webinar functions based on your connectivity and bandwidth, so the less operations you're using, the more likely the webinar will work seamlessly for you. To protect the clarity of the presentation for this session and all of our WebView sessions, everyone but the presenter will be muted during the presentation. If you have questions, there are 4 ways you can ask those questions. One is to utilize the raise your hand feature. The second is to utilize the question feature. The third is to utilize the chat feature. Or the fourth are to email your questions directly to me or to Jessica. As time permits, we will begin answering questions at the end of the presentation. If your question is not answered, please be sure to email us that question. A list of all questions and answers will be emailed back to our programs later this week. If you're participating in the webinar via a smartphone or iPad type device, you will not be able to utilize the raise your hand, ask question, or chat features, so make sure to email us your questions directly. Please make sure your volume is turned up, sit back and relax. After the presentation ends, a link will be emailed probably Wednesday to you with a video copy of the presentation, so that you can watch or share with this with your boards or other staff at your leisure. We're very excited this morning to have Kim Carter joining us to do a presentation on our Downtown Development Revolving Loan Fund here at DCA. Kim is no stranger to our downtown communities, and it's exciting to have her in her new role participating with us. So at this time, Kim, I am going to turn the presentation over to you.
Thank you, Billy. Good morning, everyone, and thank you so much for joining us this morning for how to apply and tips to closing out great projects. First of all, many of you have utilized our programs, but some of you may be new to the Downtown Development Revolving Loan Fund. So let's talk about what the Downtown Development Revolving Loan Fund is. First of all, the Downtown Development Revolving Loan Fund is designed to assist cities with the revitalization of their downtowns. And many of you are already familiar with, as being Main Street cities, are familiar with what downtown revitalization is. The Downtown Development Revolving Loan Fund offers many benefits and opportunities, including low-interest loans. It is a subordinated debt program, which means that it makes the banks more comfortable in that they are in the first position and we are in a second debt position. And we also provide technical assistance where needed to strengthen your program and to strengthen the project. Of all the programs DCA offers, the Downtown Revolving Loan Fund is the only program designed to assist with the revitalization of Georgia's traditional business districts. As Georgia Main Street cities, this program offers a wonderful opportunity for those programs with less than 100,000 in population to have access to funding for downtown projects. Just a little history on the program. The program started in 1999 with an initial investment from the state legislature of $2.2 million. Since that time, we received appropriations until the year of 2009. Based on the performance of our loan portfolio, it has allowed us to operate a self-sustaining revolving loan fund program with over $15 million in the portfolio. The program impacts, as you can see, we've invested over $19 million in Georgia's downtowns, created over 1,300 new jobs, and we've grown over 120 new businesses across the state. Mixed-use development has aided in creating more residential units in the downtown districts. So more heads and beds equals more feet on the street. The program is a real estate-driven program which offers several eligible activities for funding, including land acquisition. Perhaps you have a vacant lot that could be used for a potential project in your downtown. It can also be used for building acquisition, meaning the purchase of an existing business. New construction, we all know too well about infill development in our downtowns, so this is where new construction plays an important role. Renovation of an existing structure. We can also use the Downtown Development Revolving Loan Fund to assist with renovations to a public building, such as a city hall or a depot. And while you don't have to, you can take any combination of these eligible activities. For instance, you may have a building that needs renovation, and the Downtown Revolving Loan Fund would need to help assist with those renovations as well as acquiring the building. So we can use any combination of these activities for the Downtown Development Revolving Loan Fund. However, there are some ineligible activities. Working capital, operating expenses, and the refinance of permanent loans are all costs of doing business. So while there are programs out there such as the Small Business Administration 504 loans that these activities are eligible, these activities are not eligible under the Downtown Development Revolving Loan Fund. Additionally, the Downtown Development Revolving Loan Fund may not be used for administration costs or to establish a local revolving loan fund. So what are the loan terms? The Downtown Development Revolving Loan Fund can provide a maximum loan amount of $250,000. The great thing about the Downtown Development Revolving Loan Fund is that the funds are at a below market interest rate. Currently for Main Street cities, the interest rate is 2%. For all other cities, it is 3%. The repayment period is a 10-year term with a 15-year amortization. So for those of you who are not bankers, what exactly does that mean? It means that with a 15-year amortization, we can offer you a lower interest rate, a lower monthly payment over a 10-year period. We do highly suggest that the equity injection is similar to the 504 loans, meaning that 50% is from bank financing, 10% is from owner equity, and the 40% is typically where we provide public funding by the means of gap financing. So again, we can take up to 40% of the total project cost, but not to exceed the $250,000 maximum loan amount. So who are the ultimate users of the DDRLF? First are your private businesses that are already on your Main Street districts. Perhaps they need help with purchasing a building or renovating a building that they currently occupy. The second ultimate user would be a developer, someone who might come into your city and really want to invest money into the downtown district, and they would develop the project but would ultimately employ people in your areas, as well as grow new businesses in the area. Also, public entities such as the Development Authority itself or the city can also be the ultimate user of the Downtown Development Revolving Loan Fund. It should be noted that all of our loans do run through the city or the authority as a conduit. The city or the authority is the applicant, and the private business or the developer would be a subrecipient of those funds. The city is not obligated to repay any default on a loan, the loan repayments are made directly from that private business, the developer, or the public entity if they are the subrecipient. So when you're talking about what makes a successful application, these are some things that we need to think about. Each application undergoes a thorough review, and there are several factors that we consider. The first is broad-based community support. Regardless of which eligible entity applies, it should be noted that because most projects will take place within the downtown area, evidence of the city's wholehearted support and cooperation is essential to the competitiveness of an application. We do require that all cities and the Downtown Development Authority submit a resolution of support that lets us know that the city is fully behind the project. Also, does the project fit the community's plan for revitalization? As part of the review, we will review the community's comprehensive plans, any available downtown master plans, and any feasibility studies available to support the project. Does the project have a positive impact on the downtown? Will the project enhance the current viability of the downtown? How many jobs will be created or retained? And lastly, is the project feasible and sound? This is where the rubber meets the road. Is there a solid business plan or market or feasibility study? What is the financial capacity of the subrecipient to repay the loan? What other funding commitments have been made? Meaning, is there other banks or other fundings available? And does the project meet the overall objectives of the Downtown Revolving Loan Fund? Meaning, is your project eligible and will it enhance the downtown? The Downtown Revolving Loan Fund is a loan program, and applications will be subjected to a rigorous analysis to ensure the applicant's ability to repay the loans. State economic development programs such as the Downtown Development Revolving Loan Fund takes risks private lenders will not take or will not take a loan. Our participation provides private lenders with some comfort in shared risk. However, as stewards of taxpayer resources, the state must invest the limited funds available for economic development in viable projects that will actually create jobs and generate private investment. So as you can see, it is a delicate balance. These indicators paint a picture of the financial capacity of each borrower to assist us in determining whether or not to fund a project. We will look at your business plan. We will look at the equity being invested into the business, the cash flow. Pro forma will also be asked for during the application process. Personal finance statements will be requested, and the personal credit of all principals involved will also be reviewed. So what are some success stories that we've seen with the Downtown Revolving Loan Fund? Earlier we discussed that the city or the DDA is an eligible user of the DDRLF funding. This particular project was undertaken by the Downtown Development Authority of the City of Jefferson. The DDA requested a loan in the amount of $50,000 to assist with the repair and renovation of this two-story building built in 1890. The building was deeded to the City of Jefferson in 2007 by the Crawford W. Long Museum. The city transferred ownership to the Downtown Development Authority, which could better preserve and maintain the building. The ground floor of the building, which is approximately 1,800 square feet, was renovated and leased to a private individual who operates a gym known as CrossFit Savior. In reviewing the financing for this project, as you can see, the city injected $50,000 towards the total renovation of the project. The Downtown Development Revolving Loan Fund provided $50,000 as well to go towards renovations, which created a total project cost of $100,000. So no acquisition costs were needed as in the financing package for this particular project. It only funded renovations. This is the end result of the Downtown Development Revolving Loan Fund in Jefferson. CrossFit Savior Gym started out in a smaller space, which it ultimately outgrew. Hopefully, as the success of this business continues, the building owner may be able to purchase the building from the DDA, and the DDA can then in turn use those proceeds to enhance another building in the downtown or establish its own local revolving loan fund. Our next success story is the Baldwin in Milledgeville. Originally constructed in 1903, the Baldwin building has a storied history that includes fire, tornadoes, and a massive slipcover that hid most of the building's architectural details. The restoration of the building included 3 commercial spaces on the ground floor and 15 residential apartment units above, with a total project cost of $3.5 million. The project was funded with a creative mix of DCA and Georgia Cities Foundation revolving loan funds, CDBG, Community Development Block Grant Redevelopment Funds, owner equity, and traditional bank financing. The Baldwin also qualified for a Georgia Cities Green Loan, as well as federal and state historic preservation tax credits. Tax credits are an important part of big projects because those tax credits can be used and sold to other nonprofits or for-profit entities for cash to invest into the project. Since the renovation, the building is fully occupied with a waiting list for the residential units. The project was undertaken by a local developer in the community with the assistance of the Milledgeville Downtown Development the Milledgeville Downtown Development Authority and the City of Milledgeville. These are some interior shots of an atrium access to the apartments, as well as an interior corridor and a sample of the living space. The Amos Pharmacy building in Fairburn, the Downtown Development Authority of Fairburn and the Amos Pharmacy, which was the borrower, requested a $140,000 Downtown Development Revolving Loan Funds to partially fund renovation costs of a building which was severely burned by a fire in 2010. The building was constructed around 1890 and formerly housed the Amos Pharmacy. After the fire, the building was acquired by the borrower, who renovated it to provide a restaurant space on the street level to the former tenant, Ozzys Pizza, as well as the corporate office space for a related business of the borrower upstairs, S.J. Collins Enterprises. As you can see, there was some acquisition cost involved in this particular project, $125,000. The Downtown Development Revolving Loan Fund participated with $140,000 towards renovations, and the owner injected a little over $206,000 in cash for a total project cost of a little over $1 million. This renovation was integral in retaining a popular local business in the downtown and brought the headquarters of an existing business to the downtown area. It created 2 new businesses and created 22 new jobs. So now that you've seen some of the types of projects that we work with, how do you apply for a Downtown Development Revolving Loan Fund? The first step in the application process is to identify a potential project. After you've identified that project, you will contact myself or an economic development field rep to conduct an initial project assessment site visit. After the site visit, you will submit what we call the initial project assessment. Basically, that's just a fancy term for a pre-application. It lets us know about your project, how much money are we talking about, what are some of the details of the project, who's undergoing the project, those types of things. It's very simple. It's a very simple process. After you submit your initial project assessment, you will get a reply from our office that says that it is eligible for a Downtown Development Revolving Loan Fund program and to please submit an application. Once you submit an application, it will undergo a review and underwriting. During the review and underwriting process, it takes 30 days for us to review all the information. That 30-day window starts once all the documentation has been received. So while you may have submitted an application, let's say in mid-June, if all of the pieces to that application hasn't been submitted and is not submitted until July 1, then from July 1 to August 1 is the 30-day window. During that 30-day period, your application will be reviewed and scored based on certain criteria. It is a competitive process. While your application isn't being reviewed or judged against another application, it is very competitive and certain criteria must be met. The important thing that I would like to stress in this is that your application needs to be as complete and thorough as possible. It is important that you submit all supporting documentation, for example, your master plans or anything that I or my team would need to know that fully vets this application, that lets us know the community is fully behind it and that the community has done its homework on this particular project. After we review and underwrite the application, again, which takes 30 days, you will receive whether or not, we will let you know whether or not the project was awarded or denied. In the case of an award, we send you documentation that shows that we are committed to the project for any bank that may need that information, and the awards are given out. The money is given out after the project has closed. So unlike a traditional bank where you receive the money up front, the funding for a Downtown Development Revolving Loan Fund is given as permanent financing after the project has been completed. So for an example, for those that are in that's a renovation project, you would not receive the funding until you received a certificate of occupancy, and that is what triggers the project closing. After a project closing, we will market the project locally, and we also market it statewide. And then you continue the process again. Perhaps there's another building or another business owner in need of funding, and you would also reach out and give us a call so that we can start the process all over again. There has been some misconceptions that once you receive a Downtown Development Revolving Loan Fund, you only can have one or possibly two open in a community. That's not true. You can have, as long as the total amount of funds approved for a particular community do not exceed 10% of our loan portfolio, which is currently $15 million. So as long as a community doesn't have more than $1.5 million of the loans in that one community, you can continue to apply for Downtown Development Revolving Loan Funds. So when you want to apply, who do you contact? Our office has a no wrong door policy, so you can always feel free to contact me at any time. We also have economic development field representatives in the area. Patrick Vickers handles our Northwest Georgia area, John Van Brunt, Northeast Georgia, Tanya Mole, Southwest, Jennifer Fordham, Southeast, and Kelly Folsom Lane is in our South office. How do you apply? We accept applications year-round. They are available at our website at DCA. www.ga.gov. If you look under the heading on the home page of Enabling Economic Development, you will see another heading for financing. Simply click there. And once you select the Downtown Development Revolving Loan Fund, we have available for download a fact sheet about the Downtown Development Revolving Loan Fund program, as well as the pre-application that we talked about, the initial project assessment, the application itself, and the rules and regulations regarding the Downtown Development Revolving Loan Fund. So besides the Downtown Development Revolving Loan Fund, what are some other funding activities for Main Street projects? The Georgia Cities Foundation, which was established in 1999, is a 501c3 organization and a nonprofit of the Georgia Municipal Association. They also assist cities and counties, but however, they do not have a population limit as far as eligible applicants. They too also assist communities with their revitalization efforts by providing funding for quality downtown projects. Both of our programs have a $250,000 per project limit, not to exceed 40% of the total project costs. While the Downtown Development Revolving Loan Fund doesn't have origination fees or loan application fees, the Georgia Cities Foundation does. For more information regarding their program, I highly suggest that you visit their website, which is georgiacitiesfoundation.org. The Community Development Block Grant Program, as well as the Redevelopment Fund, also assists cities and counties. The CDBG primarily targets projects that would benefit low to moderate income persons and has a maximum of $500,000 per project. The Redevelopment Fund assists in eliminating slum and blight and also has a $500,000 per project maximum loan amount. So I highly encourage you to call me with any questions that you may have, or if you need assistance or would like to just talk openly about a project so that I could provide you any technical assistance. My contact information is here. And Billy, I'd like to go ahead and open it up for questions. Thank you.
Okay, let's see. Kim, I'll start off the questions, and if you're participating in the webinar and would like to ask a question, please take advantage of the question feature and we'll try to hit all of those. I had an opportunity to do one of these projects in Woodstock when I was there, and I know, having seen some of these projects, it's very common for us to have multiple partners involved in a project. Maybe there's a group of 2 or 3 investors that are working in a project. When they go to do the applications, Kim, how detailed is the information for each of those partners?
Each of those partners would typically have to provide the last 3 years of their tax returns, their income tax returns. They would have to provide a personal finance statement, and they would also have to include for the business, if it is an established business, 3 years of corporate tax returns, as well as the pro forma for the projected business. So it can get very detailed as to what information that we request, that the underwriters request. And it's also a lot of investors would prefer to send the information in to DCA separately, which we do understand, and we allow that. So that does not have to be a part of your application process, project packet. We will give you a list of everything that is required, and you can share that with your investor, and the investors would send that directly to us. Great question.
Okay. I have a question from a community. They say, we are a Main Street community with an active board of directors, but we do not have an active downtown development authority. Can we still apply through our Main Street program?
You would apply if the Main Street program is a part of the city, organized under the city would be the applicant. It does not have to be the Downtown Development Authority. It could be the city.
Okay. Next question. Can you clarify the responsibility to repay the loan? Is it the responsibility of the subrecipient wholly, or is the city or the Downtown Development Authority responsible for repayment?
Repayment of the loan is the responsibility of the subrecipient solely. We do ask that the city or the Downtown Development Authority assist us with any collection efforts. We don't mean we want you to go be the collector, but perhaps we reached out to a borrower and we haven't been able to contact them. We may ask that you simply reach out to them without providing any details, just saying that DCA would like to contact you. Do you mind giving them a call back? It is a non-recourse contract that we have with the city or the Downtown Development Authorities. So the repayment, again, is fully on the borrower and is not on the city or the DDA.
Next question. Would this funding be available for restaurants, downtown apartments, maybe a bed and breakfast, or a combination of all?
Yes. This funding is available for restaurants. Apartments are definitely, as long as it is in the downtown corridor, within the Downtown Development Authority boundaries, any project is eligible for funding. With restaurants, it's important to understand that while we do fund equipment on a limited basis, equipment isn't a good collateral for us. Our projects are typically more real estate driven. So if there's a building acquisition or renovation, we can certainly look at that, and certain types of equipment can be looked at.
Okay. Here's another question. If the community, if the Downtown Development Authority or the city has land that's donated to them, does their ownership of the land help count towards the 10% equity injection?
Yes, we will take a look at an appraisal on the land if one is available to determine the fair market value of that land, and that acquisition or that ownership of the land could be used towards the 10% requirement, yes.
Does the project have to be in the downtown?
The project has to be in the downtown or within the Downtown Development Authority's boundaries. We have some of our larger cities where the boundaries may not be just a traditional commercial business district. It may extend a little further out on the corridors, but primarily it does have to be within the downtown district or the Downtown Development Authority's boundaries.
Okay. Here's a question. We've had some business owners interested in the program, but they don't own their building, but would still like to renovate. Is there a way to use these funds without ownership? So are there any examples, Kim, where we have had a business that's leasing property that's been able to take advantage of the fund to make improvements to the building?
We have had a few, we call those leasehold improvement projects. We have had a few leaseholder improvement projects that we have funded. The strength of those type of projects with them being competitive would be the length of the current lease. For instance, we'd like to see that the lease is at least matched with the terms of the loan. So the term of the loan is 10 years. If you can find a landholder or a property owner that's willing to give you a 10-year lease, that's something that definitely strengthens the application process. Because it is real estate driven, it is a difficult thing to get through, leasehold improvements. However, it is not impossible. So it will depend on two things. One, the length of the lease, and two, the strength and the financial capacity of the borrower. Do they have other means to repay the loan should they no longer occupy that building.
And I would assume in that case we also need some letter from the owner saying that they approved the project.
Yes, yes.
Okay. If a project is not located in the designated Downtown Development Authority boundaries, but does contribute to the economic vitality of downtown, can it be eligible?
Currently, under the current regulations, it cannot be eligible.
But also, a Downtown Development Authority's boundaries can be changed with a resolution of council. So my suggestion to that community is if it is very important to the downtown area's vitality, you might want to look at the way your boundaries are drawn. Does that seem fair, Kim?
Yes, that seems fair.
Okay. How involved does the downtown staff become once the project is underway, such as oversight, accounting, and project progress? And I'm assuming on this question, when they refer to downtown staff, they're referring to the local downtown staff.
I understand. The local staff, really, I would reach out to you just to determine how is the project progressing. And we typically, when you submit an application, there is a timetable included that states that project completion would end by a certain day. And I may reach out to you 30 days prior to that just to see if the project is still on task and if it will still be completed in that amount of time. But other than that, once the application is submitted, there's really nothing more for the downtown staff to really handhold. Not to say that the business owner may not have any questions or concerns, but as far as a formal process, there's not really anything else that the downtown manager has to do until closing. And at closing, we would require that the Downtown Development Authority chair and the secretary be present at the closing. And of course, the downtown manager is always welcome to attend as well.
And Kim, how important is it for the manager and for the downtown organization to try to sell the application?
It is very important for you to do your homework when you submit an application. Is this project going to be something that really enhances your downtown? I understand that many business owners come to us seeking funding, but before you submit it for an IPA, you really need to try to figure out, is this particular project something that will add to the retail mix of the downtown? For instance, we will look at market studies or any downtown plans that you may have in determining whether or not this project is a good fit for your downtown. We don't want to do any homework in a bubble, though, so we need your assistance as much as possible in determining whether or not this is something that the community wants and needs.
Excellent. Another question here, is there any requirement for the borrower to adhere to the design guidelines that the city or downtown development authority has? For example, historic preservation guidelines within a community.
Yes, that is something that we look at in the application, and in fact, we offer design assistance through the Office of Downtown Development early on for any renovation projects, it's particularly exterior projects. And if you have an HPC, we also need to see the certificate of appropriateness before we will close any project.
Excellent.
So it is very important that we stand behind whatever the local guidelines are.
Well, I can see some wheels turning out there. Here's a good question on a project-specific basis. Would a combination welcome center, Main Street office, and lobby access for a local museum qualify for a revolving loan fund? The building would provide downtown meeting space and shared staff to allow our museum to be open to the public on a regular basis. So it looks like a project where we're going to talk about having an office, a welcome center, and access to an adjacent building, which is a museum.
Okay. One of the things that we will look at is the pro forma statement, which means we want to see a steady income stream in order to repay the debt. So if this particular project will generate income, then yes, it is something that could definitely be looked at under the Downtown Development Revolving Loan Fund.
Okay. Another question, can DDAs act independent of a business to administer the revolving loan fund, such as a downtown development authority buying a vacant property to renovate and then selling the property to the private sector through maybe a bid process?
Yes, that would be fine. That basically the Downtown Development Authority would be the applicant and the subrecipient, and basically they would flip the property and take those proceeds to, maybe establish their own revolving loan fund or to enhance another property. So yes, that is something that can be done.
And in that case, what we're going to be looking for at DCA is the ability of the Downtown Development Authority to pay back the loan, which may mean that they have some source of income to make those annual payments. Is that correct?
Yes, that is correct. And that is not a project that probably would be done with a new DDA or with a DDA that hasn't done projects before, because there's really no track record for us to see. So if it is a new DDA that's looking into that, I would suggest perhaps something similar to the Jefferson example, where they purchased a building and they had a tenant in mind for that building, and as time progresses, then the tenant will be able to purchase that building, and then they can use the proceeds for something else.
Is there a way for a community to check with you regarding past or present projects in their community to maybe find out what projects have happened in their community and where they're at on repayment and things like that?
Oh, definitely. We maintain a list of all projects that we've awarded since program inception. We have it by city. We also have it by region, and we can definitely let you know the status of each one of those projects.
Here's a good question, and I may chime in a little on the answer because I've had some experience with this. Is a project exempt if it is owned by an individual who sits on the Downtown Development Authority?
The project is not exempt. What we ask is that any person that serves on the Downtown Development Authority or the city recuse themselves from any discussions or votes that take place regarding the project, and that we need to see proof of that. It needs to be written up in the minutes, perhaps a letter from the city or a resolution provided that shows that that particular person has not been involved in any way.
And I would add to that a couple of years ago there were some changes. There was a change to the Downtown Development Authority's law, which states that if the Downtown Development Authority is doing business with a board member and that business exceeds $500, that there has to be a public notice put in the local paper. And my guess is that would still apply to projects like this, that not only are you going to have to put things in the minutes, you're also going to have a public notice in the paper that says the Downtown Development Authority is entertaining being a conduit on a loan for a project, and that this board member, name the board member or what have you, or even a city council member in that case, an elected official, noting that you're doing business with them. That would have to be included.
Yes, that is correct.
Does a public building have to be historic, or could the Downtown Development Revolving Loan Fund be used for new construction on a public building? For instance, a meeting center that will be owned by the city.
Yes. A new construction is certainly eligible with the Downtown Development Revolving Loan Fund, as long as it takes place within the DDA boundaries or within the city's traditional business district, because we certainly understand how we have vacant lots and some infill development needs to take place in order to enhance that area. So new construction is certainly eligible, As far as a city space, we've done very limited city hall type of projects, but depots and community space, income generator type of projects are certainly, we could certainly take a look at it as a viable option.
Okay. If the city were to apply for the loan to renovate a property that the city owns for the ultimate purpose of leasing or reselling the property, could they use another property that they own as collateral?
Yes. Yes. We can, we would still put a security deed on the property that we're assisting, but you can use another property for collateral.
Okay.
For a city project.
Is public parking for an event venue or meeting facility eligible? So would a public parking facility be eligible?
No, it would not be eligible because it is, unless it is income generating. Really the purpose and behind the Downtown Development Revolving Loan Fund is to enhance current structures that are there. So I'm not sure if a parking facility would really be a competitive application.
I would assume if it were a parking facility that was part of a mixed-use project, you know, maybe it's got retail on the ground floor, or maybe office that's adjacent or built in with it, that as a comprehensive project, we might look at that as an eligible.
Yes, but as a standalone, it would not be eligible.
Okay. Well, that looks like all the questions that we have. If you didn't ask a question and you would like to, please make sure to email either me or Jessica, and we'll add those to the list. As I said before, we will take a list of all the questions and generate all the answers again, and we'll type that up and we will send that out to you along with a link to watch this video at any time. I would encourage you to show this video to your boards, to share it with your elected officials and staff within your community so that they can understand. This would be a great tool to sit down and show to lenders in your community, and maybe some people from the real estate sector, or maybe even some property owners. So hope you will take advantage of that. I do want to let you know that our next WebU webinar is coming up, and I am going to ask if Jessica, are you muted? You're on now. Jessica, if you want to tell us a little bit about the webinar.
Sure. As many of you guys know, we've contacted you recently, and we're changing things up a little bit this year. Some of you will be doing a mini assessment process for us, which we'll be rolling out in the next couple of weeks, and others will be doing a full assessment process. And that's just based at where your current standing is for your Classic Main Street program. But at our next webinar, we will be going through what the mini assessment process will look like, what will be expected of you, and we will have that, available to click through, and we'll go through it step by step so that everybody's on the same page and that there's no confusion about what we will be asking from you for the mini assessment process. So that's the game plan for the next webinar.
All right. Well, we look forward to having everybody. Join us on Monday, August the 12th at 9 a.m. Jessica will be presenting our webinar. And again, if you have any questions related to today's topic, please be sure to send those to us. We'll also send you a link to the video. I want to specifically thank Kim Carter for taking the opportunity to be with us this morning. It's always a pleasure. And hopefully this has got some ideas generating in your minds of projects that we can help you with our Revolving Loan Fund here at the Georgia Department of Community Affairs. Have a wonderful day, and we will see you next month. Bye-bye.